Good morning and welcome to the Killik & Co market update. There's been a lot of focus on social media this week after the US House of Representatives passed a bill to ban TikTok in the US unless ByteDance, its Chinese owners, agree to sell the company within the next 6 months. While Western-owned social media platforms such as Facebook and Instagram are banned in China, TikTok is very popular in the US, where it has 170 million users, spending an average of 56 minutes per day on TikTok. Many of these users use TikTok as a source of news, and the US government is concerned that the Chinese government could use TikTok as a way to influence US voters. A TikTok ban could benefit other social media platforms in the US. Here are other social media platforms that are also used by TikTok users. It stands to reason that a TikTok ban would result in more time being spent on these platforms. Facebook and Instagram are both owned by Meta, and YouTube is owned by Alphabet. The new bill would be subject to a vote in the Senate, and President Biden has indicated that he would sign the bill into law, but the situation under a Trump presidency is much less clear. This week, it was confirmed that November's US presidential election will definitely be a Trump-Biden rematch. Trump was vocally against TikTok back when he was president previously, but this week he has suggested that he would be reluctant to do anything that could benefit Meta, and that's because the company banned him from their platforms for 2 years following those Capitol riots in 2021. Meta shares have had a strong run in recent weeks, and we'll be watching them closely as this story unfolds. Further information has been released this week about the upcoming Reddit IPO, and this has led us to reflect on IPO trends more broadly. Reddit is an information forum planning to list on the New York Stock Exchange later this year. The company did raise funds privately in 2021, and back then it had a valuation of $10 billion. However, according to this week's IPO documents, the company now has a valuation of only $6.5 billion, a reduction of 35%. And this is evidence of how much investor appetite for IPOs has fallen in this era of higher interest rates. The cost of capital is now higher, there is less money to go round, and investors are less willing to put money into loss-making companies at higher valuations. This chart here shows the quarterly amounts raised in IPOs globally going back to 2019. 2021 was an incredibly strong year, but the values have dropped significantly since then. And finally, the latest changes to the UK's inflation basket have been announced. The inflation basket is intended to show what the typical Brit is spending money on, and looking at the changes can be a helpful insight into buying trends. Here are some notable removals and additions. Hand hygiene gel has been removed following a surge in demand during the COVID era. Roasting tins have also been removed. Gluten-free bread and sunflower seeds have been added, and that shows a greater level of focus on health and dietary needs. And air fryers have been added in place of those roasting tins, and perhaps this suggests a greater need for convenience and speed and more use of newer technologies in cooking. Looking at the calendar for next week, results are due out from Prudential, Accenture and Nike. And before we finish, I just wanted to give a shout out to my colleague Gordon Smith, who's our head of fund research. He's recently launched a series of podcasts, and he's interviewing a series of well-known fund managers. This week's one is all about the Indian economy, and it's well worth a listen. You can find the series called Investor Insights on our YouTube channel. That's it from us. Have a great weekend, and we'll see you next Friday.